Welcome back to the Deep Dive. It is Wednesday, February 4th, 2026. And if you were with us last week, you'll remember we had this whole metaphor for the Russian economy.
Right, the engine that was redlining.
Exactly. Running way too hot, just burning fuel to keep the war effort going.
Yeah.
We said the check engine light was, flickering.
Well, it seems like in just 1 week, that flicker has turned into a full-blown system failure.
It has.
Yeah.
So we have to update the metaphor. And honestly, it's not a great update. Based on data that came out literally yesterday, February 3rd, that engine isn't just overheating anymore.
No, it's seizing up.
It's seizing up. We're talking stagnation. The radiator has officially blown.
And that's just one half of the story we're looking at today.
Right, because we also have to pivot east. Last week we called China the silent crisis. And now it's not so silent. The new numbers paint this picture of what I call a fractured reality. You've got deflation on one side, this massive travel boon on the other.
It's a total mess. So our mission today is to really dig into the latest reports from Moscow and Beijing because, once you get past the propaganda,
The military parades, all of it.
you see two authoritarian powers that are, quite frankly, struggling to keep the lights on.
Okay, so let's map this out. First, Russia will hit the new budget deficit numbers, this painful VAT hike.
And we have to talk about the sanctions. Something big just happened on February 1st.
A huge update on the oil price cap. Then we head to China. We'll look at their so-called managed slowdown.
And the distraction, that's key. When things get bad at home, you start pointing fingers or, military hardware elsewhere.
Let's start with Russia's engine seizure. The Fortress Russia story is just crumbling. We heard whispers of low growth last week. But yesterday, Deputy Prime Minister Novak gave the actual number for 2025. What was it?
The headline number is just 1.0%. GDP grew by roughly 1%.
1%. And what are they forecasting for this year?
Well, this is the kicker. Novak himself admitted that for 2026, the best they can hope for is maybe 1 to 1.3%.
So last week we talked about hollow growth. Building tanks just for them to get blown up. Are you telling me even that is sputtering out?
It is. And remember, you have to take that 1% with a grain of salt. That's the Kremlin's optimistic take.
Of course.
If you look at independent forecasts, like from the Russian Academy of Sciences or the IMF, they're saying maybe 0.6%, best case 1.0%. The economy has basically stopped moving.
It's dead in the water. Do we have the manufacturing data to back that up?
We do. The January PMI, the Purchasing Managers Index,
The big health check for factories.
it's dropped to 49.4.
And just to remind everyone, anything under 50 is bad news.
It's a contraction. The war boost is exhausted. They're trying to squeeze a lemon that's already dry.
So the engine is seizing up.
Yeah.
But here's the part that I think confuses people. Russia has this incredibly low unemployment rate, something like 2.2%.
Right.
In a normal economy, you'd be celebrating that. So why is that a terrible sign for them?
Because it's not a healthy labor market. It's a labor crisis. It's a complete paradox.
How so?
The unemployment is low because there's nobody left to hire. They're reporting 1.6 million unfilled jobs.
1.6 million.
Open spots they can't fill. You've got the mobilization pulling men to the front, and you have, hundreds of thousands of educated people who just packed up and left.
So the workforce itself has just shrunk.
Dramatically. So you have factories that need workers to even hit that pathetic 1% growth, and they can't find them. It's a hard ceiling. They physically cannot grow.
The engine is out of parts.
Okay, speaking of running out of things, let's talk about the money, the budget. Last week, we mentioned that 5.6 trillion ruble deficit.
Which was about 2.6% of GDP. Just a massive hole.
A gaping wound. But now we have the revenue numbers for January 2026, and this number is genuinely shocking.
This is the number that should be causing panic in the Kremlin. In January, their oil and gas proceeds were just 393.3 billion rubles.
Okay, put that in dollars for us.
About $5.1 billion.
And $5.1 billion sounds like a lot, but I'm guessing the context is what matters here. The context is everything. That number is half of what it was in January of 2025.
Wait, say that again? Half.
50% lower, year over year. The cash cow is officially dying.
Wow.
You have to understand, their energy exports, that's a quarter of their entire federal budget.
Yeah.
When that gets cut in half, you're not looking at a deficit anymore. You're looking at a catastrophe.
So how are they paying the bills? The war's still going on. Soldiers need to be paid.
They're doing what we talked about. They're burning the furniture. The sovereign wealth funds are being drained, for sure. But the real pain is being pushed onto the population.
The VAT hike.
That kicked in January 1st. From 20% up to 22%, And that hits everything you buy.
Which brings us back to that phrase from last week, tactical poverty.
It's becoming more and more real. They claim inflation is down to 5.6%, but that's only because they've jacked up the interest rate to a crushing 16%.
So you're strangling the economy to hide the numbers.
Exactly, but people feel it. The VAT hike means producer costs go up, prices for, bread and potatoes go up. Real incomes are just getting squeezed from every possible angle.
Tactical poverty is the state basically saying, the more gets paid for first, you figure out the rest.
That's it in a nutshell. And the reason for all this, the reason the pie is shrinking so fast, is because the external pressure is working. Which brings us to February 1st.
The sanctions update. This is the mechanism, isn't it?
This is what's driving that revenue collapse. On February 1st, the G7 and the EU dropped the oil price cap.
To what?
It's now down to $44.10 per barrel.
$44. I mean, that is painfully low.
It's brutally low. It forces Russia to sell their oil at a massive discount because they still need Western shipping, Western insurance.
They're selling their crown jewels for pennies on the dollar.
And it's not just oil, is it? The EU is playing a long game on gas, too.
I saw that.
They formalized a law to ban all Russian gas. Pipeline gas will be gone by September 2027, and LNG, the shipped gas, is out by the end of this year.
So that's it. The door to their biggest customer for, 50 years?
Is being shut, locked, and bolted permanently, and they're getting serious about enforcement. A UK bank was just fined £160,000 for, processing a payment.
Which sends a chill through the whole financial system.
Don't touch Russian money. It freezes them out. So you got no tech, no finance, and no markets. There is no off-ramp for them. They are stuck.
A dead end. Okay. Let's pivot. Let's go east. Because if Russia is the seized engine, what is China? We called it the silent crisis. Now it feels like a fractured recovery.
Fractured is the perfect word for it, because on the surface, things look okay. They hit their 5% growth target last year.
Which sounds amazing compared to Russia's 1%.
Right. But then you look closer. Q4 was a 3-year low. All the momentum is just gone. Forecasts for this year are already dipping to 4.5%.
And they have the opposite problem to Russia. Not inflation, but
deflation, the ghost of deflation. CPI was just plus 0.8%.
Wait, 8%?
Yeah.
That's dangerously low.
It is. And factory prices are still falling. It means nobody has any pricing power. Companies are slashing prices just to get rid of inventory.
Which brings us to this tale of two economies we're seeing in the data.
Yeah.
There's this weird split.
A huge split. So manufacturing, the PMI is 49.3. Contracting, just like in Russia, factories are in trouble. But then you look at services, the PMI is up 52.3. Healthy.
And this is all because of the Spring Festival travel boom.
That's what's driving it. They're expecting a record 9.5 billion passenger trips.
9.5 billion. It's just a mind-boggling number. So, okay, people are traveling, and that's a good sign.
Well, this is the fractured part. It's the distraction. People are moving, they're on trains, they're seeing family. But are they spending?
Are they buying things?
Doesn't look like it. Retail sales underperformed expectations. And the government is panicking because they just front-loaded 62.5 billion yuan in subsidies.
For what?
For appliance trade-ins.
You're kidding. They're paying people to buy new toasters.
Basically, yes. It just smells of desperation. If you have to subsidize a washing machine purchase to goose your GDP numbers, you have a serious domestic demand problem.
And the root of that problem, the big anchor dragging everything down, has to be the property market.
It is. Investment in property fell more than 17% last year. That's not a slowdown, that's a crash.
But didn't they just scrap those 3 red lines on developer debt? Shouldn't that help?
In theory, maybe. But the consensus is it's just too little, too late. The private developers, they still can't get funding. The banks won't touch them. The bubble has popped.
And if your biggest asset, your apartment, is worth less than you paid for it, you're not feeling confident enough to go out and buy a new TV.
Not even with a subsidy.
Yeah.
And then you layer on top of that the youth unemployment crisis.
Still painfully high.
16 to 17%. Think about that. Almost 1 in 5 young people can't find work. That is a recipe for serious social strain.
And this is where it gets a lot darker. Because if you're Beijing and you have a property crash and millions of unemployed, angry young people, what's the playbook?
You create a distraction. Geopolitics as misdirection.
The Justice Mission 2025 military drills around Taiwan.
Exactly. And Beijing sells it as a show of strength. But if you listen to Taiwanese officials, they see it very differently. They think it's partly a way to get the Chinese people to stop looking at their own economic problems.
It's the classic magician's trick. Look over here at the shiny jets, not at your shrinking bank account.
And it just creates this vicious cycle because the more they posture, the more they isolate themselves. They're banning U.S. cybersecurity software now.
The U.S. tariffs are still in place, hurting their exports.
They are. So China is now totally dependent on exports to Europe, to Africa, anywhere but the U.S. They've built up this huge trade surplus, like $1.2 trillion.
Which sounds good on paper.
But it just masks the weakness at home. It means they're selling everything abroad because their own people aren't buying. That is not a sustainable model.
So let's pull this all together. Two giants, two very different problems, but a similar outcome.
It's a dual failure, really.
Russia is stuck in what you called a dead-end trap.
Absolutely. The engine is seized, stagnation, no workers, and an oil-dependent budget where the revenue just got cut in half.
And China is in a managed decline.
Frantically trying to prop up a burst property bubble while using military drills to distract from deflation and mass youth unemployment.
It's incredible, though. Both regimes are trying so hard to project this image of immense strength.
But that's the final provocative thought, isn't it? That strength has to be built on something real. If the money runs out, which is what's happening in Russia, or if your people stop believing in the dream, which is the risk in China, how long can that facade possibly hold?
A collision course with economic reality.
And reality always, always wins.
Well, on that note, if you want to know what happens next, keep your eyes on those Russian oil revenue numbers next month. That's the real countdown clock.
That's the one to watch.
Thanks for diving in with us. We will see you next time.